Welcome back to the channel, everyone. We've got a detailed Chainlink link update for you today. So if you're invested in Link, watching the broader crypto market, or just curious about where the space is headed, you'll definitely want to stick around for this one. Let's dive right in. Chainlink, showing signs of life, technical rebound in progress. Chainlink, the decentralized Oracle network that plays a crucial role in powering smart contracts across the Web3 ecosystem, is currently experiencing a modest recovery. After revisiting the critical $10 support level, Link has bounced slightly and is now trading at 11,543 hence, showing a plus 0.82 point gain over the past 24 hours. Now, to put this move in perspective, we need to zoom out a bit. Since reaching its recent high near $30 in December 2024, Link has declined by more than 60%, which is in line with the larger bearish trend affecting the entire cryptocurrency market. But this drop isn't happening in a vacuum. There's a storm brewing in the global financial markets, and it's hitting risk assets hard, crypto included. A global wave of risk-off sentiment. Over the past week, financial markets around the world have been shaken by mounting macroeconomic concerns. Let's look at the numbers. The S&P 500 has plunged 9.96%, a major move for an index that's usually considered relatively stable. The Nasdaq didn't fare much better, tumbling 9.8% in the same period. And Bitcoin, the digital gold and bellwether of crypto, dropped 6.44% this week alone. So what's causing this massive risk-off environment? It's largely tied to a sharp escalation in geopolitical and economic tensions, triggered by a new round of tariff policies introduced by President Donald Trump. These tariffs have ramped up trade hostilities between the U.S. and major global economies in Asia and Europe, creating a ripple effect across asset classes. Investors are spooked, markets are pulling back, capital is fleeing risky assets, and unfortunately, altcoins like Chainlink are often the first to feel the squeeze. Institutional fear, uncertainty, and reduced exposure. Despite Chainlink's fundamental strength, it remains one of the most widely integrated Oracle solutions in decentralized finance DeFi. Institutional players are stepping back. Why? The answer lies in the combination of macro uncertainty and the volatility of the crypto asset class itself. Even fundamentally solid projects are not immune when the market adopts a defensive stance. As investors retreat to safer havens, low-cap and mid-cap tokens like Link suffer disproportionately. This doesn't mean Chainlink has lost relevance. Far from it. In fact, the underlying adoption of Chainlink's Oracle technology is growing. It remains a cornerstone of Web3, enabling decentralized applications to securely access off-chain data, something no blockchain can do natively. Projects from DeFi, insurance, gaming, and even real-world asset tokenization are continuing to rely on Chainlink's infrastructure. But again, in the short term, market sentiment trumps fundamentals, and right now that sentiment is overwhelmingly cautious. Technical analysis. Where does Link go from here? Let's break down the chart. On the daily timeframe 1D, Link is hovering just above the $10 support, which it tested on April 7th. That zone has historically acted as a psychological floor, and seeing a bounce from there was expected by many technical traders. Now trading at 11,543 cents, we're observing a very modest recovery. But is it sustainable? Let's look at the technical indicators. Moving averages. 50-period EMA is currently sitting at 14,899 cents. 200-period EMA is at 16,723. These numbers confirm a bearish EMA crossover, a signal that's been in play for months. This structure reflects an ongoing downtrend and provides resistance levels that bulls must overcome to confirm any meaningful reversal. RSI, Relative Strength Index. Currently at 34.04, the RSI has bounced just above the 30 level, which is typically considered oversold. This could be seen as an early signal of relief, but we're still in bearish territory. Until we cross back into the 40s and 50s with strength, bulls shouldn't celebrate just yet. MACD, Moving Average Convergence Divergence. The MACD lines remain firmly in negative territory, and the histogram is still red. No bullish crossover has occurred, meaning downward pressure is still present. This is especially concerning because MACD typically lags price movement. It suggests that even with the small price rebound, momentum hasn't shifted. Volume. Trading volume remains relatively low, which reinforces the idea that this recovery lacks conviction. Without a surge in buy-side volume, it's hard to believe this is anything more than a short-term bounce. Scenarios to watch. So what should we look out for next? There are two key scenarios that could play out for Chainlink in the coming days and weeks. Bullish scenario. Link holds above $10. The RSI climbs above 40, signaling stronger buying interest. Price breaks above the 50 EMA, 14.99, with a significant increase in volume. MACD begins a bullish crossover. If these conditions are met, Link could challenge resistance at the $16, $18 range and potentially gear up for a larger recovery. Bearish scenario. Price fails to hold the $10 support. MACD deepens into negative territory. Broader market continues to decline due to worsening macro conditions. In this case, we could see Link fall toward the 8-7 region, which hasn't been visited since early 2023. A breakdown here could trigger further panic selling, especially from short-term holders. Fundamental strength versus short-term fear. It's important to separate short-term price action from long-term fundamentals. Chainlink remains one of the most integrated and indispensable technologies in crypto. It has partnerships across the blockchain ecosystem, strong developer activity, and ongoing innovation like CCIP, cross-chain interoperability protocol, and proof of reserve services. In the long run, these advancements are likely to pay off in a big way, especially as traditional finance increasingly explores on-chain infrastructure. But right now, price is being dictated by fear, not fundamentals, and that's why caution is key. Stay sharp and stay subscribed. To wrap things up, Chainlink has bounced off the $10 level, but remains in a bearish market structure. Broader financial markets are under pressure due to trade tensions and policy uncertainty. Technical indicators are flashing red, suggesting any upside is fragile, at least for now. So what's the move? If you're already invested, tighten up your risk management. If you're on the sidelines, wait for clear signs of strength before jumping in. Either way, staying informed is your best weapon. And hey, if you found this analysis helpful, don't forget to like, share, and subscribe. We're on a mission to hit 1,000 subscribers this month, and your support makes a huge difference. Hit that bell icon so you never miss out on timely updates, news, and technical breakdowns just like this one. Thanks so much for watching, and as always, stay smart, stay safe, and I'll see you in the next one.